Hi guys, welcome to another edition of Trading Bitcoin with me, your host, Tone Vase. Uh, I just did one of these last night right before bed. I just had a lot of work this morning. I have to run out to the Blockchain Economic Forum because I'm speaking in about 40 minutes. So this is going to be a very quick 10-minute video. Let's go straight to screen share. As always, please utilize the educational tools, learn trading section of my website. If you are an expert at sections 1 to 5, you can then learn section 6, which tends to explain all of these weird numbers that I have above and below my candles. For additional help, you can check out the consulting section right here or attend one of my trading seminars. As always, I haven't even updated it. LA is pretty much sold out and still seats left in DC and some seats left in New York. Need to update my website. Oh God, I really hope I can review my Twitter messages. It's funny, I'm getting messages like this. They're like, hey, Pinecode is a pain in the ass. Yes, Pinecode is a pain in the ass. Oh, no, well, not that message. Sorry, there was another one. Anyway, people are trying to program this indicator in Pinecode, and that's when they realize that it's a lot more cost effective to just, pay the 0.05 Bitcoin. Because you can write it yourself, but you're going to spend a lot more time that costs a lot more money because time actually is money. All right, I'll try and review my Twitter messages or my or my comments on my YouTube channel. There's lots of scammers pretending to be me. I have no time to deal with them. Please be smart. Here's the weekly chart. The weekly chart remains completely bearish. We have fallen below the 7,600 support. 7,600 was your strongest point of support. The next strongest point of support, which happens to be even stronger than 75, 7,600 area, is 1,300. So that means if the price of Bitcoin reverses anywhere between now and 1,300, it would have reversed a little more unpredictably because the predictable points of reversal were statistically 75, 7,600, and now the 1,250 to 1350 zone. Of course, nobody wants to see Bitcoin fall to 1250, 1350. Let's just say my trading seminars will become almost unaffordable for me, or not cost effective for me, I would say, because I'm gonna continue charging everyone 0.1 Bitcoin for my services, but it cost me over $1,000 to rent a venue, so you can do the math there. So we'll see what happens. I have chosen to denominate my life in Bitcoin. Let's see how that works out for me. So take advantage, and a lot of people are taking advantage by signing up for seminars and code purchases. All right. The weekly chart remains bearish. We're on a 5. I'm looking for a 9. It would be great if we got that 9 above this line. This is also very, very important. See this little dotted line? I can make it thicker. Let me see. I can make the line thicker. Right there, this dotted line right there, this green dotted line, okay? If we're going to get a 9 on a weekly, you really want to stay above this line because it sets up a better probability of a reversal off the 9, because if we close below the 9, it sets up a higher probability of a countdown. To learn more about this system, right here in Learn Trading, there is an amazing document. It's all the way at the bottom. It's right here, Bloomberg Market Essentials. I'm not going to click on it, but you can, and it explains that entire situation. All right. So a lot of people are commenting on Twitter that I glanced through it that, well, we've never had a 9 in this indicator, a red 9. Well, that's because you're only looking at the uptrend. You're only looking at the uptrend, like right here, right? Like if I drop the backtest and I only go to the regular just to clean up the history, right? Right. You don't see, oh, didn't want to do that. You don't see a red 9. That's because you're looking at a bull market. You have to go all the way to the bear market of 2014, and you can see there is a 9 right here to the downside. There is another 9 right here to the downside, which actually called it perfectly. All right. So let's see what happened here, right? So yeah, so the dotted line was all the way down there. Well, there's two of them actually, here and here, right? So there's a dotted line right there. You can hardly see it, and it's this black line, and we actually stayed above it, right? So the last time we had weekly candles that gave us red nines with green candles, we stayed above the green dotted line. But the green, see, there's actually two green dotted lines here. I know it's hard to see. There's one more there, right? So if I let me do this. Let me make it even thicker for you. Right there. All right. So there are two green dotted lines, right here and here, but only the most recent one matters. So the prior time when we did get these red nines with green arrows, we clearly stayed above this green dotted line, but it was pretty damn low at $83. Then there was one here, and as you can see, we never had a red nine close below it, or here, or here, or there. And now we're here, right? So you really, 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 really want to stay above this green dotted line because things can get very nasty very, very badly, all right? So let's see what happens. Hopefully this week we'll bounce up a little bit. We can still get our weekly 9 in the vicinity of 5,000, and then we could resume the uptrend. Here's the daily. Again, the daily is looking bad. I sent out that tweet. Look for a daily rebound tomorrow. Okay, tomorrow. Tomorrow there's going to be another one of these nines. Look, everyone trades differently. I like these indicators because they have helped me in the past. They help me time the markets really well. Now you can say, well, Tone, now half of Bitcoin traders are using your indicator. Does it become less effective? Well, I don't know. Maybe it becomes more effective because more people are using the indicator. So it actually goes back and forth. I still believe in my technical analysis over anybody else. I don't look at anybody else's technical analysis. And like I said, this was looking like a strong bounce, but it didn't hold. And the moment it didn't hold, there's no such thing as a double bottom, right? So like people that are sending me images like this of a double bottom, sure, I mean, that happens, but I will always bet against this happening, and I will be right most of the time, okay? And you don't know the time horizon here, right? Like the longer the time horizon on this, the more critical it is. The smaller the time horizon, the less this is likely, right? So if these are daily candles, this is actually a very rare situation. If these are weekly candles, then it's a more likely situation, all right? But this is actually rare. This is a rare situation. I would never ever bet on this. I would never bet on this reversal. I would bet on this breakout, but I would never bet on this reversal. If I had to pick a direction here, I'd be shorting, okay? Because most of the time this would like crash down below that line, okay? You don't get two perfect chances to buy the bottom. It's just not how markets work, okay? So the daily chart, again, no reversal candle. You're one candle away from a 9. You have now gone below your bearish targets. You are below the 200-day moving average. You have big sell pressure with big red volume spikes. Your MACD is nowhere near a reversal. Your RSI is finally oversold, but it could go oversold indefinitely, right? So we have no idea where this is going to end. The next most likely outcome is definitely not 5,400. I mean, that I can tell you what it's not going to be. It's not going to be 5,400. It's going to reverse somewhere above this, clearly above it, or it's going to reverse clearly below it, okay? In the long run, we should have never got out of this purple channel. We should have stayed in this purple channel for nice, back and forth trading. So Bitcoin remains somewhat overbought. I have been nervous about Bitcoin ever since we went above 7,500. And don't forget, in the beginning of 2017, my high for the year, in the beginning of 2017, the price of Bitcoin was under $1,000. My upper target was actually only 3,000. You can go back to the articles, okay? My upper target was only 3,000. I did properly give a quote on that 3,000, unlike what happened with Cointelegraph and 100,000, right? I can tell you exactly how it went about. Basically, one of my followers decided to use the weekly upper end trend line and that I had. As you can see, you can see how we got smacked down by this trend line. I've had this trend line in my chart for years, and one of my followers basically extrapolated this trend line and said, hey, where is this trend line at the end of 2018? And as you can see, at the end of 2018, it's right at $100,000. So he wrote that, hey, Tone's trend line is saying that we will be at $100,000 by end of 2018. And then Cointelegraph went ahead and printed that as if I said it. I have never actually said it. So anyone that attributes that to me is basically using incorrect information. But like, I don't have time to police the internet. That's not my job. People can think what they want. If they attribute me to the wrong comments and those comments turned out to be correct, perfect. If those comments turned out to be incorrect, they will not be able to prove that I actually said it because I never did. So it's kind of like a win-win for me in a way. So please, like, misquote me all you like. Like, it doesn't actually hurt. Next. Daily, I already explained. Like, even if we go back into this channel, like, it's not the end of the world, guys. Run your business accordingly. Again, you see how you have this monster rebound, right? Okay, so you had this 9 candle on the 4 hour. I was hoping it would give us a little bit of a bounce, but again, going on a bounce off of a 9 on the 4 hour, you're going against the daily, which is only on an 8. So the daily remains bearish, the weekly remains bearish. So you really got to be careful with these bounces on the 4 hour because you're going against multiple higher level time frames. All right, so you can see this bounce on this candle, but this bounce clearly didn't hold. So what's happening right now? So again, this is the 4 hour chart. You can see right here you have an automatically drawn support line. It's actually a stop loss line. So if you were to enter a trade off of this 9, this is your stop loss, right? So this can also be used as momentum. So right here you have, once again, a double, triple bottom, whatever you like. So that means the moment you fall below this line, extra panic and extra selling pressure is setting in. So going below this line, I'm just going to take this. I'm going to copy that. Sorry, guys. I don't really want to miss my speaking engagement, right? So going below this line sets you up for more downside. Work in this downside and then a 4 hour chart. Well, clearly the 2 candle may not have been trading below the 1 candle. The 3 candle is not yet trading below the 2 candle, but it looks like any minute now we're going to go lower. So if we go lower, there's a short trade on the table using the 4 hour chart that is still in line with the daily charts, which continue to give you no end in sight for your reversal. At the least, you have another 24 hours to look for more downside. So right now, you should not be timing trades to the upside for the next 24 to 48 hours. You should still be, if you're a short-term trader, you want to look for trades to the downside, okay? Now, there is a 13 coming. The last 13 didn't really do anything. You have potentially another 13 on the way, but this 9 has kicked off yet another countdown to another 13. So it's like the bearishness just continues to snowball. The 50-period moving average continues to decrease. Same thing here on a daily. The 50-period moving average continues to decrease very quickly. So sooner or later, we are going to bounce back, and we're going to retest the 200-day moving average. We're going to retest the 128-day moving average. We're going to retest the 50-day moving average, and we're going to retest the bottoms of these triangles. But resistance now continues to mount. Is it possible we're not going to get to 20,000 for the rest of the year and maybe even next year? Absolutely, because the lower we go, and the slower we go down, the more resistance points we're going to have. So in a way, you want a giant catastrophic fall so that there's no resistance back to the upside, right? This was the problem on the way up. The faster you go up, the less support you have on the way up. So when it's time to go down, you go down faster. If we actually go down slow, we're going to build all these resistance points. They're going to be a pain in the ass to cross on the way back up. So I hope this all makes sense. Here's the 1 hour chart. The 1 hour chart gave you, and I talked about this yesterday, again, it gave you a really nice short-term potential buy point that clearly did not work out. So how do you play this? Okay, so if you want to be very, very aggressive, sure, you can buy right off of this 9, or you can use traditional trading methods, which tell you do not buy a rebound until after it goes above the doji. And you can see that it never went above the doji, right? But in either of these situations, if you waited to buy above the doji, you never actually got into the bullish trade. If you decided to jump the gun and trusted the 9, an aggressive 13 and a combo 13 and went in early, where is your stop loss? Your stop loss is the bottom of the doji right here. So within 2 hours, you have to admit that your trade is not good and you have to get the hell out. What's going on now? Well, the same thing as the 4-hour chart. Right now, what you have is a new low, and the moment it goes below this low, it's a short trade. There's no long trade here, right? There's absolutely nothing here that is signifying any reason for a bounce. So it looks like by all means we are going lower and perhaps significantly lower by percentage terms. All right. I'm sorry. I mean, I'm probably not going to do these 3-day ICO seminar, ICO conferences ever again in my life. I would rather just like do this stuff. I'd rather put out traditional markets. I don't even know, like the trading view changed everything. I just want to pull up the SPX again. I heard the stock market crash. I actually forgot to look at my traditional trade. Thank God my traditional trade is hedged up the wazoo. And I looked at it like this morning, like an hour ago, like, oh my God, how much money did I lose in my traditional trading because my trade was making money because of the rise in the stock market. My trade was actually very well hedged. And while it did not, it lost my profit, it did not put me into the red yet. I will update you guys on my traditional trade. Hopefully I can still get out of it. Well, it's going to be profitable no matter what. And again, like this goes to show you that this indicator is useful. I mean, granted, it didn't exactly cause a huge selling point here, but again, these are points of interest. And as you can see, here's the daily chart, and here's your point of interest. And Wall Street never got this, right? This is why I use my indicator, my version of it, and not the original creators of it, because they would not have had it. Because when you have a green count following by a green count, all their candles are blank. Wall Street had no idea there was a 9 here, and they probably totally missed this and got caught by surprise because Wall Street does watch this indicator, but they watch the original indicator, not the tone-based version. Maybe one day they will watch the tone-based version because they could have caught this dive. So traditional markets, this was bad. I'm hoping for one more candle because of the way my trade is hedged, and then my hedge is actually going to make me money. So in a way, I'm looking for a giant stock market crash one more time, just so I can make a bunch of money on my traditional trade. All right, guys, no time for questions. I hope I'm not late for my own panel. I'm going to flip on the video one more time to say bye to you. And I'm wearing the shirt because I like the shirt. I want to be on camera with this shirt, but I would not be buying the dip right now at the moment. I still think there is some more downside, at least till tomorrow. Let's see what tomorrow brings. And I'll see you all on the next one. I will certainly do a video late tonight. Bye, guys.